Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Paul, how's it going, buddy?
Good, man. How you doing?
I'm good. I'm looking at the window, and all I see is my reflection because it's dark out there. It's not even 5 o'clock, and it's nearly pitch black. So we're a couple weeks away from the shortest day of the year, which is pretty great. You know, then the days get longer by like 1 or 2 minutes every day.
That's right. Yeah, it's kind of a crappy time of year. Although Christmas music is on the radio now, and I like that. It kind of gets me in the spirit, you know. And we put our inflatables out last night, and we're gonna do we'll do some additional Christmas lights. We usually wrap our poles and have like the icicle stuff, so our house usually looks pretty festive.
Yeah. I'm thinking about, I see all those signs, those bandit signs, you know, come popping up in November, like, hey, well, you know, the companies that will come out and put the lights on for you, and then they take them down for you. Like that right there, especially living in somewhere like Minnesota, that's a great business.
Yeah.
And that is something I might definitely look into next year. Like,
I like that.
because the
And
thing
of
is,
course,
every time you put lights up, half the strands are burnt out anyway from the last year. It drives
Yeah.
me nuts.
we've had good luck, but yes, you're totally right. And then of course, inside the house, Tammy has 20 metric tons of Christmas decorations that take up an entire wing of our basement. And,
Yeah, you need a lot of
but it's-
storage.
And you add to it every year, right? You add new knickknacks and
Yeah.
whatever. But it does look. I tell you what, I got to give her credit. It looks nice.
Oh, you need to decorate your background there, so you got a little, festive
You
background.
know what? Maybe I'll do that
the recordings.
I'll do that for next week.
I should do that
Okay.
too.
So
I'll
in case
just-
people are wondering, that gold book right there, that is Secrets of the Federal Reserve by Eustace Mullins. That is a fantastic read.
And how old is that? When was that printed?
Ooh, I do know that it's not as old as you think. It's
Okay.
not. It's gosh, is it 80s or 90s maybe? I'd have to look. But it's like I got that from Mr. James, and
Yep.
he has it at his store. But anyway, great read. So if
Nice.
you like The Creature from Jekyll Island, you'll like that book too.
Is that one shorter?
It is shorter.
Good.
Yeah, it's only a couple hundred pages.
Yeah.
So it's much
Nice.
shorter.
Nice. Well, cool, man. I think we may hit on a couple different topics today. So I think it'd be nice to start off with going back to one of the big principles of what we do and why we do it is that when you have capital, opportunity will find you. So you've got a recent example of that, I think, from a listener, right?
Yeah, we had someone reach out on email about a month and a half ago or so, and he had opened up his first policy about 7 months ago. It's with a very good company. It's with our favorite company, in fact. So that was good. Paying big premium relative to his income, and it turns out he runs a Toro business down in Texas, and doing very well. It's got 2 vehicles in it, but they do very well. They're booked a lot.
So Toro, for those not
Yeah,
who haven't heard of it, it's like
Sure.
Airbnb for car leasing, right?
yeah, that's exactly right. Tammy and I'm generally more comfortable doing business with things that I'm used to. So I like cars, and I've used Toro now. I think we've used it 6 times in the past 18 months. And yeah, so you rent people's personal cars, or a lot of time they just buy a vehicle for the
Mhm.
business. So it's a dedicated business, and that's what this is for him. So he's got like a Hyundai, I think, and a Tesla Model 3, and which is a vehicle that one of those I own and I like, and it garners a high premium, right? Because it's a premium car. So anyway, so controlling the banking function, very important. And so I decided to do a deal with this gentleman, and his debt service on these vehicles was high, and I could do better. So we basically did like a loan swap, essentially, where I provided some capital and he could trade out at a better rate than the rates he had. And we were able to free up about $500 a month of cash flow for this gentleman. And so yeah, it's a win-win. I make money, and he is gonna ultimately make more money in the business. The ROI on his Toro business will be that much better. Um, so yeah, it's good. But the whole point of that, folks, is just that, I think there's a different way to put it. I think Ryan says this, like, capital attracts opportunity, and I like that. Or is it opportunities attracted to capital? I'm not sure which one it is, but it is very true. And that's why Dave and I talk about this, because we found by putting money in a place that we could get to it, i.e. not in a qualified plan, that we would see the landscape differently, and we would start doing different things with our money. And this is our investment money, right, Dave?
Mm-hmm.
This is not. So anyway, bottom line, profitable deal, and it's collateralized, right?
Yep.
I want to protect myself, and we've learned over the years that that's extremely important, haven't we?
Yep.
And so yeah, very, very happy with it.
Yeah, and you set the terms because you're the banker, right?
Oh yeah,
The
it's the
banker.
golden rule, right?
Yep. He who has the gold makes the rules. Yeah.
That's right.
Yeah. Nice. And another cool thing about this, like you mentioned, this is beneficial for him as well. So it's not like, I mean, if you had all your money in a 401k or some qualified plan, you're not benefiting anybody else in that except you and the person you're handing that money over to control, right? They're benefiting more than you because they make money whether you make money or not.
That's right.
But you're really not helping out, your fellow man in any way by doing that. Not that you need to. It's your investment money. You can do whatever you want with your money. You don't have to use it to improve the lives of others. You have the freedom to choose. But in this situation, you're using your funds in a way that's more beneficial for you, yet also benefits somebody else significantly.
Yeah, and that's what I like about it. I told him early on in the process of vetting it that it has to be a win-win. I'm not. It doesn't make any sense for him to just trade out the debt if it doesn't really benefit him.
Right.
But in this case, it benefited him a lot, and I was able to play with the amortization schedule for him to stretch it out even longer to lower the monthly payment, which freed up even more cash flow. And it's something that he hadn't really thought about, or that maybe he didn't think I'd be interested in doing that, but I was. And so again, great point. And but that's the kind of things those are the things that will find you.
Yeah, absolutely. And you're right. It has to be a win-win. I mean, that's something I've learned over on the private lending side of this business that we're in, like more like institutional private lending. Like if somebody wanted to start a business or we wanted to buy somebody's business from them, maybe they need a capital infusion or whatever. It makes no sense to say, well, I'll provide the capital, but I'm going to take 90% of the business. Because that person then is working their butt off for just 10% of the business, which may be okay for your bottom line short term, but long term, they're going to get burned out. They're going to quit, and it's going to be an absolute loss for them. And then, congratulations, you have a business that nobody's running now. But yeah, it's got to be a win-win. It's got to be beneficial for the person on the other end of that. So you don't want to go into business with somebody just to take their money and watch them fail. Like the whole point is succeed, because if you succeed, I succeed.
Right. I want him ultimately, we talked about return of capital. I want him to be successful.
Yeah.
So that he can expand and he makes more money. Ultimately, this guy will probably do more business with me going forward. Right. And that's great. So.
Yep. Bank Fugere.
Yeah, it's got a nice ring to it. And the little symbol could be a fern, because that's what Fugere means. It's fern.
It means fern.
Or as the French guys in Afghanistan, they were like, it's a bush. I was like, okay, got it. It's like a bush.
Where the red Fugere grows.
That's right. Great book.
Yeah. Is it though?
Well, it's sad.
It's mandatory reading in like junior high or something.
I enjoyed it. I enjoy Where the Red Fern Grows. It's a good book.
Well, cool. Yeah, good story, man. Well, on my side, I guess something new for me is I just put an application in for, policy number 7. So the last one I did was about a year ago. This year, income goes up. I need somewhere else to continue storing that income. So open another policy. So we'll get that one going and increase the amount of death benefit that I can actually start putting to work, that future death benefit. Like we alluded to last week, we've got a strategy where we can start putting that future death benefit to work and earning a reward today. So that's pretty excited about that.
Love it.
Yeah. So we've had some fun interactions with clients recently. I think this is one I want to share. And shoot, I don't have the text message pulled up, so I'll try to pull that up while I'm talking. Okay, yeah. You got it up. So we had, here it is. We had that red flags episode not too long ago. And it was all these red flags about here's what to avoid. Like if you work with an insurance agent and they do this, just turn around and run away. But we had, we're working with a client, you and I, a shared client, and he has a large convertible term policy with some, local company, a smaller insurance company that is not a mutual company. And we didn't know that at the time, but he went in to meet with them to talk about possibly converting that.
Yep.
And it was pretty funny. He sent me a text saying the first thing he put in front of me was an IUL, then wanted to show me an illustration. So I think that may have been like one of the first red flags we had. Like,
I think it was the first one.
Yeah, like if they want to lead with an illustration, which if they're selling IUL, they always want to lead with an illustration, then they don't know what they're doing. Just straight up.
Yeah, anyone can do an illustration, folks.
Yeah. So he said, this guy put this, what IUL can do for you, promo brochure right in front of him several times. And he's like, I told him straight up, never say IUL around me again after the 8th time pointing to this stupid sheet of paper that he put in front of me. So I feel proud, man, that red flags episode really opened some eyes. And when people listen to that and they learn from it, they can recognize those red flags when they come up. So it's pretty funny.
Yeah, I would say to folks, listen, if someone's trying to sell you something that you're not quite sure about, and it's specifically that type of product, like a UL product, ask them if that product gets more efficient over time or less efficient over time.
Yep. Yeah. Well, and the only thing they can go back to is the illustration with the illustrated values.
That's right.
No guarantee.
Which are not
values.
Guaranteed.
Yeah. So
they look great though on paper, Dave. I mean, they look nice.
Yeah, they really do.
Very enticing to the
right. Well, it's enticing to hear the phrase, "Hey, you get to take part of the market upside, but you don't have to partake in the market downside." Like, I mean, that's such a marketing gimmick right there.
I wonder if they ever tell the people that the cost of insurance, because it's annually renewing term, goes up or can go up, right, as you age, and it will go up, right? Anyone retiring from the military, for our military folks that looks at veterans group life insurance, yeah, sure, when you're 40 and retiring from the military, it's not too bad, but it's annually renewing term, and it gets extremely expensive over time. And at some point, you're not writing that check. And you've heard me say that before, but $1 million policy for term on a 60-year-old person is quite expensive.
Yeah, well, they don't have to tell you. It's all written in the easy to understand illustration that you get to see, right? Have you, every time somebody sends me an IUL illustration, I'm like, oh my gosh, I got to go to a special school just to decipher all of the different wording here. Like you can't get a straight answer in those things.
Isn't it funny though, how when UL was invented, it was because, you had dudes like Ralph Nader and some other folks back in the early 80s, I guess, talking about whole life and how it was deceiving and hard to understand and not good for the consumer. And I feel like they invented a product that is all those things.
Yeah, and way more so.
Way more so.
Yeah, right. Yeah.
But anyway, yeah. Avoid that like the plague, my opinion.
Yeah. I mean, if you're earning 20% a year every year indefinitely, might not be a bad deal.
Sure.
But you're not. Yeah.
Unless you live past 100.
Yeah. So, and we've hit on, who the ideal client is out there. An ideal client, I got one of the best examples is, I think we do a pretty good job on this podcast of restating, hey, you need to read a book and then contact us. So read Becoming Your Own Banker, 92 pages, take you 3 hours or less. And then contact us, because then we can actually have a fruitful conversation.
Right.
What's even better is when you get a client that wants to refer somebody in, but they don't refer them until that person has read the book. Like,
Perfect.
Perfect. Like, yeah, thank you. Thank you for doing my job and making sure that it's because it's kind of like you're vouching for somebody, right? Like, hey, this is Paul. He's a good guy.
I had a guy read the book twice recently.
Yeah, before he called.
Yeah. I was like, even better, man. Like, you're not going to have a meaningful conversation with us unless you've read that book. Otherwise, it's a quick 15-minute phone call just to tell you to read the book and why you should read it, really. There is so much information packed into that book, and it's so simply written. As he said, it was written for the everyday American, for the layman, right? It's so easy to understand. You are going to have questions about it because there are the way he puts things that could be confusing, I guess. But once you've read it a couple times and read every word, he fully explains what he means. So,
yeah. And you can listen to it too. Audible, you can get that book. It's I don't know how long, 2.5 hours or something.
Yeah, I listen to like 1.2, and
so it's even less. And then you don't have to, some people like to pause it. I was talking to somebody who was saying, well, then I had to pause it and pull up the PDF with the illustration that they were referring to.
Sure.
I'd say you could do that, but it's not even necessary because the illustrations, I think Nelson said if he were to write the book again, he wouldn't use them. Yeah. They're for example only. It's really not that important to get caught up in the illustrations in there.
A lot of people, Dave, take what he illustrated in the book as kind of the gospel of like, this is the way it is.
Yeah.
It's not. And it's just for those specific people, that was the policies that were designed to support what they were doing, whether you were the logger or the people, sending their kid to college or whatever. There's a million ways to Sunday to design a policy, but your policies will be designed for you and your needs.
Right.
Not based on that book.
Yep. Well, so another thing we've run into with a recent client is, this is somebody who just gets it. And it's fun when you see somebody get it, because now, like, he's doing the brainstorming for us on how do I get more premium into these policies? Like, if I've tapped out me, if I've tapped out my wife and all of my children, what's the next step? I got more income coming in. It needs to go somewhere, and I want to get it in there before it goes outside of my ecosystem. So how do we do that? So, and that's another thing we love about this is there's so much flexibility in every aspect of infinite banking when it's set up correctly using the correct companies and all that. But just expanding the system. So
yeah, he's literally expanding the system to accommodate all income as much as he can, isn't he?
Yeah. And that can be a challenge. So we have to look at other avenues other than just him and his immediate family.
I was just happy to find someone that paid more premium than I pay finally.
Yeah.
And way more.
Yeah. Hopefully. Yeah.
I would love to be at that level at some point, but good on him. And I love the light bulb moment that he's had over the really 2 years probably at this point.
Yeah.
Yeah, I think I met him and you met him 2 years ago on a webinar for something.
Yeah, you're right. It was a year and a half to 2 years ago.
Yeah, it was a long time ago. And,
it's a funny thing about business. You do something one day, and then 2 years later, it comes back to benefit you.
Yeah, just unbelievable.
Yeah, and not just him, but his wife is on board.
Totally on board. Hey, they probably listened to the episode.
Yeah. So when you get, having one of the one person in the relationship on board is great. Once you get both, like, there's no end to the creativity, especially if you're business owners, you're entrepreneurs, that type. The brainstorming that you two can do together when you're both on board pursuing this concept together is unstoppable.
Yeah, that's right. We're, normally I think we are like the gung-ho, let's go type people, right? And the wives are normally the ones, and this could be different. I'm just saying this was my example. Like, hey, Paul, like, slow your roll a little bit. Let's let's learn about this a little bit, and then we'll decide what to do. And I understand that.
Which is good, because if we just were aggressive and jumped at everything that came along because it felt right away,
Yeah.
it may not be doing our due diligence.
But in this case, hesitating can cost you.
Yeah, for sure. Especially when it comes to your health.
That's what I was getting at. We
Yeah.
never know, not to be like we never know.
Yeah. Yeah, we don't want to scare anybody into doing this, but to be honest, sometimes you need to scare people into just getting life insurance in general.
Right. Ask any person that we've had to turn down because they're uninsurable what they wish they would have done when they were healthy.
Right. Yeah.
And now they can't. So
I saw somebody post on LinkedIn, another producer, life insurance is love insurance. That's a good way to think about it. Like, how much do you love your family? Do you love them enough to actually care about them after you're gone?
Personally, I didn't really think about the legacy thing, Dave, until I had children of my own.
Yeah.
When I was a young single dude, I didn't really. I owned whole life. Full disclosure, I've had it since I was 23. But I was going to go to my parents, obviously, because I didn't have anyone else to leave it to. Yeah. I think I had some of my friends in there too. As like, hey, party on. But yeah, once I had children and realized, well, with this asset, right, with dividend paying whole life insurance, I can have both access to my money when I need it and leave a legacy at the same time, without compromising anything. That's tough for people to understand still, I think.
Yeah.
They look at the startup costs and they're like, but if you can think more than, beyond next week, this is for you.
Yeah. And we didn't think about legacy because we weren't taught anything about it.
True.
Our kids, when they inherit these policies and we turn the ownership over to them and they can start paying their own premium, they're going to fully understand it.
That's right.
Man, juvenile policies, they're incredible. So I was looking at that one I sent our client today.
Looked at it. I looked at it too, and I was like, whoa.
You look at like when those kids reach like 60 years of age, they pay, at that time, maybe they can pay $15,000 in premium. Their cash value increased by like over $100,000. It was unreal.
Yeah.
What these are capable of doing.
It is the younger you are. I'm opening up a policy right now. It's a smaller one. But it's appropriately sized for the family at this time. And, the baby is 2 months old. Yeah. And, a $2,000 a month premium or $2,000 a year premium turns into a crap load of cash value and death benefit later in life. A lot more than one would think.
And imagine when that baby's an adult, how easy $2,000 will be. I mean, that's easy today to come up with $2,000 for something that's making you money.
That's right.
But I mean, $2,000, 20, 30 years from now, it's going to be like $200.
Yep.
Today.
Exactly.
Unfortunately.
Yes.
Thank you, Federal Reserve.
Thanks.
Yeah.
The creature.
Yeah. Thanks, Powell. Yeah. So
people hang on every word from the Federal Reserve Chairman, though. It doesn't matter who's in that seat.
For some reason, that's what drives me nuts about the market. You got this idiot who's been lying to you for the last 2 years and just leading you on like, oh, inflation's transitory. Oh, maybe it's gonna, be a little higher, or maybe it's gonna stick around a little longer. Okay, now it's permanent. Okay, now it's continuing. Like, when are you gonna stop believing him and falling for it? Like, and the market reacts every single time.
Speaking of inflation, Dave, I used your walnuts example again with somebody on a call yesterday.
Yeah.
Because most people don't understand what inflation is. And I don't know what episode that was, man, but
they don't understand the cause. They think inflation is rising prices, which is the result of inflation. Yeah.
That's right. So the walnuts example, or the clipping of the coins by by Caesar in Rome, is another good example. Where one gold coin, for a toga, now it's it's 1.5 because you're clipping the coins or whatever. So yeah,
and the citizens know this stuff. Citizens aren't stupid as much as
not stupid.
The Fed and the leftists would want you to think that citizens are complete morons. We're not.
Right. We are getting. I do think like we're getting dumber though as a society.
Well, it's because all they do is listen to the media. People who get dumber if you want to be misinformed, listen to the mainstream news, right? So,
Yeah. Oh, no,
yeah,
no question.
yeah. If you want to be informed, read some books so you can interpret what they're saying.
They get all their information from The View.
Ugh, just threw up in my mouth.
I know. Awful.
Yeah.
Anyway, what else we got?
Um, I feel like that was it. Well, wanted to hit on flexibility, not just in expanding the system, but
Okay.
we're coming up on people who are renewing, maybe hitting their policy anniversary year, and maybe
Sure.
they've been doing the same, paying it the same way every year. Like they started it with, hey, I'm going to make monthly payments,
Sure.
and then it goes into year 2, 3, 4, 5, and they're still on monthly payments. But maybe it's time to reevaluate how you're paying that policy. There's multiple different ways. So talk to your agent. If you're one of our clients, talk to us. Like, what are my different options every year when I go to pay my premium? Because there's a lot of flexibility in there with how you can set that up every year.
Yeah. And just to review, paying your premiums annually should be the ultimate goal. And I always tell them that, like, listen, not necessary. We're going to start where you're at. But if you could transition to paying an annual premium, and this goes likely for your auto insurance and your homeowners and all that. Most people probably pay their homeowners. Well, if the house is paid for, they might pay it once a year. But anyway, annual premium is the best way to buy any insurance.
Yeah. Yeah. The fewest, because just think about it. If you're doing monthly transactions, you're costing the company money.
No question.
So they have to recoup that cost.
That's right.
If you're doing one transaction, it's a lot cheaper.
Yeah.
Yeah.
And over time, over a long period of paying premium, it will make a difference eventually.
Yeah.
Now you're splitting hairs. Yeah. But the hairs can get kind of long if you get my drift later in the policy's life.
Yeah. The longer it goes, the bigger that delta becomes. And
so
it compounds.
That's right. I pay all 7 premiums annually, including the convertible term. So 8 premiums at different times during the year. And I kind of space them out, so that they're not all hitting at the same time. That's another strategy that's good.
That's a real nice strategy. Another one is maybe if you get quarterly bonus payments from your employer. There's a lot of pilots out there, airline pilots who get, profit sharing. Just plan your premium around that, man. Pay quarterly. Yep. Or semi-annually, whatever may be, whenever you get those bonuses.
2 of our recent podcast clients are quarterly payers, actually.
Yeah.
Right? Those are the first ones I've seen.
I don't know that I've done any quarterly payments. It's just been monthly or annual. I'd say about 90% of people pay annual because most people come in and they've got a chunk of cash sitting there. They're ready to do something with it. But other than that, the other 10 to 15% maybe is monthly, but quarterly. Yeah. Semi-annual, every 6 months.
Yep.
You got options. Yeah. Just like you have options with repaying your loan. And those options are infinite because you can you get to determine that repayment schedule. Right? Yeah.
Again, if you're harping on interest rates, and of course policy loan rates are way less than what you're finding out in the economy now. So it always was a better option, a policy loan, as opposed to something else, in my opinion, because I want to maintain that control, but it's even better now.
Yeah.
When you compare what, mortgage rates are hovering around 6 to 7%, I think currently.
Right. Yep. As of this recording, that sounds accurate.
Yeah.
So.
And those have a repayment schedule, I think.
Yeah, and it's brutal.
Brutal.
Only what is it? Maybe the 15 or 20% is going towards principal. The rest is going towards interest right away.
Yeah, I think in the first 5 years with closing costs, it's 87% ish, 84 to 87, depending what your rate was, is interest.
Yeah, it's brutal.
It's crazy.
And then what do people do? Refinance or they move? So then they start the clock all over again. And the banks love it. They're like, all right, we'll start at the top of this AM table. Good for them, right? Hey, he who has the gold makes the rules.
You can't. Someone else, speaking of that, someone just read The Richest Man in Babylon. I had recommended that book to somebody. I can't remember who I was talking to the other day, but they read it, and that's another short little book written in 1926. Phenomenal little read that'll get you in the right mindset as well, make you think about things too.
Yeah,
and they talk about life insurance a little bit.
It's amazing how some things, 100 years later, have not changed.
Nope.
Yep. Cool. Well, all right. I think that'll do it for this week. So good chatting with you. And until next time, control your capital.
Or somebody else will.
We'll see y'all.
See ya.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.